Now, TCS Q3 strikes the right chord. Nifty IT surges in trade versus all its sectoral peers. But what are the factors that are kind of aiding the move for the Tata company? Rucha joins us to tell us more as to what has happened, what's working and what's not working. Rucha, take it away.
Okay, so I'll start with the bull and bear case for TCS. TCS has been surging in trade, so this one is definitely one thing that investors wanting to be watching out for. I'll start with the kind of demand, actually the demand in the BFSI space, how this is working out. On the bull side, where we have signs of recovery seen by many of the management and even the big large banks are now spending on IT because of an improved outlook over here. But for TCS, actually the bear case over here is that it has seen flattish growth in last 2 quarters. Remember that last time also it posted around 0.1% constant currency YOY growth in the banking space, and this time in third quarter it posted around 0.9% constant currency on YOY terms. So kind of flattish growth is what we are seeing since last 2 quarters for TCS, but yes, signs of recovery still seen is the kind of bull case that we're watching out for TCS over here. Next, my next topic is on discretionary demand. Well, definitely the bull case over here is that the management mentioned about early signs of revival in discretionary spends, and probably this is likely the reason why the stock is buzzing in trade today, even after posting a weak number. So this one is clearly a bull case for TCS, but you know, the management also mentioned that they're cautiously optimistic, and this is what we are seeing across IT industry, where the management though is calling out for early signs but are not that confident of how CY25 will fare for them, because it is largely based on the kind of political changes happening in the US and also other geopolitical challenges which the IT industry is facing. My next case over here is probably talking more about the discretionary demand. As I said, that management mentioned CY25 to be better than CY24. This can be a kind of bull case over here, but what is negative is that this kind of scenario was already mentioned by other peers since last quarter only. So the likes of Infosys, wherein upgraded its guidance in the last quarter, it did mention that CY25 will be better. But TCS is a little late in seeing those kind of improvements or stating out publicly that CY25 will be better than CY24. Now I want to move on to my last topic, which is the people metrics. Well, the bear case, I'll start with the bear case over here. Headcount declined by around 5,200 employees. So this might be an indication that demand is also not doing well, and therefore hiring is probably slowing down. But on the other hand, on the bull case, the company has already hired 11,000 freshers in third quarter and is on track to achieve 40,000 hires in the third quarter. So this is a kind of bull case over here, and the management also mentioned that the headcount growth is not directly related to the kind of top line growth which it will be seeing. So that is the kind of bull and bear case that we are looking out for in terms of people metrics over there. So based on 3 topics: discretionary demand, headcount, and how the BFSI space is panning out for TCS, we have bull and bear case over here.
Right, Rucha, thank you so much for giving that detailed analysis on TCS. Sunny, I'll come to you. The numbers were not very impressive, but the commentary coming in is very strong, which is why we're seeing the uptick in stock. What do you make of this, and what is the way forward for TCS?
Yeah, definitely. I think very well covered all the key pointers that the demand environment is looking good. That's a big positive takeaway for the entire IT as a sector, especially on the BFSI side, where there is an intention of client to spend on discretionary side, especially from a North America territory. And that's a big pie as far as the IT budget is concerned for the entire IT industry. I think augurs well for at least the worst is over for IT in terms of demand environment. I think on a low base of FY25, all these companies are ready to deliver a maybe high single-digit kind of top line as well as bottom line growth in FY26. On the top of that, to some extent, depreciation in rupees may help report growth as well as margin expansion in FY26. So I think overall a positive set. But I think having said that, I believe the mid-size IT company or mid-size IT peers can report relatively faster growth. A case in point, First Source, backed by organic as well as inorganic acquisition. Inorganic growth can report kind of 12 to 15% growth over the period of next 2 years. LTTS, Coforge, Oracle Financial Services. So I think on a relative basis, we feel that mid-sized IT company can outperform its large cap peers in terms of earning delivery. And any dip can be utilized to accumulate stock from mid-sized IT company universe.
Nifty IT up 3.5%, and all counters on the Nifty IT are up and above and in green in these markets specifically.